We had a beautiful week for sure, and if you like fours, this week was your number. The S&P 44.44 at one point, closing at 44.42, nearly double the 2020 lows.
Right, the double was at 44.74, which we did reach earlier in the week before we started to see investors get a little bit nervous about the Delta variant and the thought that perhaps things are peaking on an economic and corporate level.
And not only that, what was happening in Afghanistan obviously has caused a consternation around the world, not only in the markets. And so you look at, does that change investment thesis anywhere? For example, in China would be a thought, but you think about that in bigger terms, and we'll talk about that in just a moment. But what we do want to talk about is we're coming to the end of an earnings season that has been just spectacular. We talked about it going into the earnings season, that our expectations were high, but it was better than high.
It certainly was. At the beginning of July, the thought was S&P earnings were going to grow at about 65% on a year-over-year basis. Came in closer to 95%, the best quarter I've seen in my entire career, and that's been quite a while.
Right.
And that, was just a startling performance, and the analysts continue to be slow to incorporate the improvement that many companies have engineered by keeping margins at record high levels, generating sales growth, earnings beats, and the rest.
Yeah, that's right. And now as we head into the end of earnings season, the names that did produce, had good earnings, there's no question that they reacted in a positive way. And we can talk about individual names in just a moment. But once we're done with earnings season, we get the summer volume, this August volume that begins to wane, and then sometimes you get volatility.
Right. The summers do tend to be more volatile. We are in the seasonally weak period from July to the end of October. But when you see corporate earnings reports like we saw from Macy's and Kohl's, you just have to feel good about where the consumer's at. And again, this GDP number, we're now looking at a 6% Q3 number, despite all the supply constraints that are causing companies like Toyota to cut their auto production by 40%.
Right. So talking about GDP, can't help but have to talk about the Federal Reserve. And every August, they get together in Jackson Hole, Wyoming, and they talk about what it's going to look like going forward. And inevitably, there's some news that comes out of Jackson Hole.
Right. There's a thought that perhaps Jerome Powell will tip off the markets about what his thoughts are on tapering, because really his is the only vote that matters on the FOMC. And our belief is that he's going to want to wait. He's going to want to see more data, most importantly, that jobs market data in September, because that's when they'll get a sense of how back to school is going, whether parents who have been staying home with their children are going to re-enter the workforce, and so on.
Yeah, and so you talk about, waiting, perhaps what you're suggesting is waiting to make a change in interest rates. I think that's way into 2022. What I'm concerned about is, are they going to talking about tapering their purchases? And please explain what I meant there.
Well, what you mean is the Fed has been supplying emergency liquidity to the market since the pandemic broke out, purchasing $80 billion in Treasury securities and $40 billion in mortgage-backed securities per month. That's a lot of money. That's going into excess reserves. That's flooding the banking system with capital. And it's a good thing for the economy. But one could argue that at this point, with the GDP growing 6%, 3 quarters in a row, the danger has passed.
Speaking of bringing all of these things together, Jackson Hole, I think, might be a virtual meeting this year because of COVID. I've read that it's going to be later in the month, but they're certainly going to be newsworthy. And so will there be a taper tantrum is always our concern at this time of the year. And so as you go through that and volatility starts to pick up, you could put together, if you're doing this by yourself and you're playing at home and saying, what should I do going forward? Put together a shopping list of opportunities that come forward. If you want to engage a firm like Annex Wealth Management, that's a whole different story. We meet nearly every single day to talk about what opportunities are in front of us. If you want to participate in that, there's a way to get that done.